The mandates are coming down all over the world. Mask mandates are being torn down. Vaccine mandates are being torn down. People are fed up, and it looks like the war on COVID may be coming to an end. Now, what does that have to do with silver? Well, hello there, my friends. Rafi here from the End Game Investor with this week's silver report for Arcadia Economics. And we're going to start this week with an interesting centennial history lesson about silver. Why is this? Because the mandates are coming down all over the world. Mask mandates are being torn down. Vaccine mandates are being torn down. People are fed up, and it looks like the war on COVID may be coming to an end. Now, what does that have to do with silver? It has a lot to do with silver. And we're going to start with a 100-year-old article from some newspaper I found. This video is brought to you by Reina Silver. Without generous sponsors like these, this information would not be able to get to you. A little secret about Reina Silver is that its former name was Trudeau Silver, and they made one of the best name changes ever. Major shareholders include names you might be familiar with, including Sprott, Crescat Capital, Jupiter Capital, and Commodity Discovery Fund. Reina Silver is a silver exploration company with its prime property being Gigi Mines in Mexico. They have completed a phase 1 drill program and proceed to phase 2 and are well funded to complete that. Thanks to their shareholders and supporters like Arcadia Economics. This is the Mojave County Miner and our mineral wealth. Yes. The title of the article, dated Saturday, January 24th, 1920, about 102 years ago, titled Silver, the World Sensation in 1919-1920. The first paragraph, and then we'll go into a key paragraph. Silver, the metal, proved the world sensation in the year 1919, reaching the highest prices in the recorded history of the universe. For the first time in history, silver coin of the leading nations of Europe sold at a higher price than gold coin. This does not, of course, mean that silver is more valuable than gold. Merely a silver dollar or shilling is worth more than a gold dollar or shilling. Now, the question is, what is going on here and why, and what does it have to do with now? Pre-war versus war prices. Remember what was going on in 1920? That was post-World War I, a humongous war, the biggest war until that point in universal history, had just ended, and price inflation was going through the proverbial roof. Moving down, silver better than 16 to 1. The high British or world price of 79.5 pence represented a value for silver way above the historic 16 to 1 ratio. To be exact, represented 11.9 ounces silver worth 1 ounce of gold at 20.67 per fine ounce for gold. Now, this is not an industrial issue because during World War II, you may remember, nickels were made out of silver. Silver is not used for war. Copper is used for war efforts. So there is an abundance of silver. So why would the price of silver go so high? It's because of the money printing to fund a war and the monetary inflationary issue. It is not an industrial silver issue because there's a lot of silver during wartime. It's just there isn't enough real money. And so silver becomes in demand for money purposes. Let's see what was going on with consumer price inflation in around 1919, 1920. Here, in 1915 is the outbreak of World War I. Immediately after that, prices start to rise as humanity begins destroying property, spending money on destroying property, so you have more money and less stuff. That's why prices rise. Very simple mathematics, economics. Around 1920, price inflation reaches a record about 23%, right around the time this article about silver at records is being published. And then we had the collapse of 1921, which was, to this day, the worst recession in US history. It just didn't last long because the Fed didn't have much power back then to do anything about it. So they stayed out of it, and it was over in about a year. Now, what does that have to do with the end of the war against COVID or coronavirus or whatever you want to call it? This was a war in the sense that production was slowed and stopped to declare war on a disease. Not as bad as property being actively destroyed for the purpose of political gain. However, it was a war, and it looks like the world is now opening up, and there's going to be a bunch of money flooding into the system, just as there was at the end of World War I and World War II, also inflationary times. And in those times, silver reached peaks. In 1919, it was an all-time universal high. With mandates dropping and the world opening up again, is the end of a war, not in the same sense as an active war like World War I, but economically, it is a very similar equation, so watch out. Going back to junk silver premiums, the physical price of silver in your hand, 17.34% premium that has been rising since the middle of January. The record here is at 18%, and I say these will continue to rise as price inflation continues to heat up. The CPI for January 2022 has just been released, and there were some rumors that it would be lower because the weightings for the CPI were going to be reconfigured. However, the reading was 7.5% inflation with an expected 7.2%. So once again, another beat. And the highlights, once again, were in food. And food inflation is the most accurate measure of where we are on the scale of hyperinflation, because once people run out of purchasing power, they plow everything else they can into food because that is a basic necessity. So the food at home index, this is a quote from the CPI, rose 7.4% over the last 12 months. All of the 6 major grocery store food group indexes increased over the period. By far the largest increase was that of the index for meats, poultry, fish, and eggs, which rose 12.2% over the year. I want to compare what was going on with silver during the consolidation after the 2011 peak until 2013 versus what is happening now. And they're very similar pictures with one big difference. Here, this is the 2011 peak. You'll see that silver established support, strong support at around $27. This gray line over here where it says 26.68, it's somewhere between $26 and $27. Don't know exactly. You see here it was hit 1, 2, 3, 4, 5 times. You could say 6, you could say 7, depending on how many times you want to count these bumps over here. And this technical stuff is not an exact science. It is a rhyme for history. Now, you'll notice here also that at this point, when it hit the 5th time, it was testing the 200-week moving average, which is also a big technical line that a lot of algorithms use to program their trades, which is why when it breaks through, it generally breaks through hard. This is what happened here. On the 5th time, it finally broke through and we were confirmed in a silver bear market, and gold followed. That was hard for all precious metals investors, no doubt. However, what is happening now looks similar, but is quite different. Here's the next slide. Here's a silver technical picture now. This is akin, first of all, to the 2011 high. In this picture, you have silver testing around $22 low once, twice, 3 times, 4 times. You could call this the 5th time, except we are way far from the 200-week moving average this time. We're nowhere near it. So it doesn't look like on this next test, which may have already happened, that we are going to break the 200-week moving average. That is not very realistic unless it is going to be some kind of flash crash and a liquidity scare like happened here. It is possible. I just don't think it's very likely. But if it does happen, I will definitely be buying strongly. Now here we complain about silver not gaining value in real terms, in terms of commodities. However, this chart shows that that is incorrect. Looking on a long term, see here from 1990 to 2005, this is an era of monetary stability where the price of silver does not change in commodity terms. This is the silver to CRB. The CRB is a commodity index. So this is basically how many units of CRB commodities can you get with 1 ounce of silver. The higher it goes, the more expensive silver is in commodity terms. You see here that the world pretty much changed in 2008 in a monetary sense. And silver kept climbing from that time until now. And on a long-term trend line, we are at that low in the trend line since 2008, and we are in the same monetary universe as we were in 2008 because that is when serious money printing actually started. Here you see that the high in commodity terms in 2020 was much higher than the high in 2011 terms, than the high in commodity terms in 2011, which was over here. It is almost twice as high, almost. And yes, oil had a lot to do with that, with oil going to negative. But still, we see in the face of that how stable real money actually is. Now let's zoom in. This is silver since the 2008 financial crisis. Here we see a little bit more detail on that trend line. 2008, 2015 bear market bottom in silver and gold. 2018, this was also a low around when the stock market kind of crashed in late 2018 and the rate hiking cycle stopped again. And here we see that trend line hit once again, but let's zoom even further. Here is that 2015 bottom. Here is that 2018 bottom. And if we zoom in, we can see that we still might have a little bit of a ways to go. But after corrections this extreme of silver and commodity terms, it is not long now before this reverses itself. I have no doubt about that. We're about to embark upon another cross, and you see this last cross of the 50-week moving average below the 200-week moving average marked a bottom here, and it might also mark the bottom coming up over here, and we're very close. There's no need for this trend line to exactly be tagged, but it is a possibility, so prepare for slightly lower prices of silver and commodity terms if necessary, and don't worry about it. Also this week, there's been some movement in the vaults. This is Malka Amit. It was not a significant holder of registered silver. In fact, it wasn't a holder of registered silver at all until April 2021. And now there was some big movement from around 650,000 ounces 2 days ago to now 1.6 million ounces. That's about 1 million ounces moved overnight into this vault. It came from the eligible stocks. So this isn't silver that is moving physically. It is silver that is going from storage to sale. What is going on could be that some short, and this is probably one party with all of its silver stored in Malka Amit, that is preparing to deliver against its short contracts, possibly for the next month's delivery, which is an active contract in March. I don't think it's for February because the open interest in February spot is very low, and I don't see much movement there. So this is probably has to do with March deliveries that are coming up in the next 3 weeks. This is Rafi of the Endgame Investor with this week's silver report for Arcadia Economics. The war against a virus seems to be ending. And boy, is it going to be exciting when all of those new trillions of dollars filter into the banking system, and only those with real money are able to preserve their purchasing power. See you next week.